All right, welcome to The Explainer. Today, we're going to crack open the blueprint of a company called Kinsale Capital Group. They're living proof that a boring business can produce absolutely brilliant results. Their day-to-day might not make headlines, but trust me, their performance is extraordinary.
So that really begs the question, right? How can a company in what most people would call a pretty traditional industry get these kinds of exciting results? Well, the secret is all about where they choose to play, a market that flies completely under the radar for most of us.
See, Kinsale isn't trying to reinvent the wheel here. Their whole game is about going where others won't. They specialize in those really tricky, complex risks, the ones the big guys just flat out refuse to touch. And that little corner of the market, turns out, it's incredibly profitable.
And this quote just hits the nail on the head, doesn't it? It perfectly sums up what they do. This isn't about flash, it's not about hype. It's just about being really, really good at what they do, day in and day out. Okay, so to really get what makes Kinsale tick, we've got to dive into the secret world they operate in. It's called ENS insurance. So what in the world is ENS? Well, ENS stands for excess and surplus. Just think of it as the insurance for the uninsurable. These are the risks that are just too unique, too complex, or frankly, too high risk for your standard insurance company. And the cool thing is, this gives companies like Kinsale way more freedom to set their own prices and write their own rules, which, as you can imagine, is a huge advantage. So what are we actually talking about here? What kind of stuff does Kinsale insure? Well, think about high-risk construction jobs, businesses in the cannabis industry, even entertainment venues or properties right on the coast. You know, all the things that just don't fit into a neat little box for a typical insurer. And here's the twist. This tough, messy market is actually a gold mine. Why? Well, for one, there are way fewer competitors, which means they can charge higher prices. Simple supply and demand. Plus, they're not bogged down by the same heavy regulations, so they can pivot and adjust their rates super fast as new risks pop up. It's a fantastic setup for profitability. So, how does Kinsale actually win in this market? I mean, what's their secret weapon? It's basically what you could call a four-part competitive shield that protects their entire business.
Okay, let's break this down. First up is disciplined underwriting. This is huge. It means they're laser focused on profit, not just growth for growth's sake. They say no way more often than they say yes. Second, they run an incredibly lean operation. Their expense ratio is super low, which just pads their margins. Third, and this is a big one, is their technology. They've built their own systems that can spit out quotes in minutes, not days, which brokers absolutely love. And finally, you've got a founder-led management team. These guys live and breathe this stuff and are all about managing risk conservatively. All right, so that's the strategy. But does it actually work? Let's look at the numbers, because the proof is definitely in the profitability. Okay, before we get to the results, we have to talk about one key number. It's called the combined ratio. And honestly, it's the ultimate report card for any insurance company. It's pretty simple, actually. You just take the claims they paid out plus all their expenses, and you divide that by the premiums they brought in. Now, if that number is under 100%, congratulations, you're making money from your main business. If it's over 100%, you're losing money. It's that black and white. And Kinsale, they don't just squeak by under 100%. They live way below it, consistently. They are, year after year, running a profitable underwriting business, which is basically the holy grail in the insurance world. And this really puts it into perspective. Look at the difference here. While the rest of the industry is hovering right around that 99% mark, basically just trying to break even, Kinsale is way down in the low 80s. That gap, that's pure profit. And it's all thanks to that disciplined model we were just talking about. And it's not just that one metric either. You look across the board, high return on equity, consistent growth in their premiums, strong earnings. And they do it all with very little debt compared to their peers. It's just a picture of a really, really well-run company. But, no company is perfect. There's always risk involved. So let's pull back and look at the full picture, the bull case versus what could go wrong. So when you lay it all out, the bull case is pretty clear, right? You've got a high-margin business, incredible discipline, and they're in a growing market. But you have to consider the risks. I mean, what if a massive hurricane hits a bunch of their coastal properties all at once? That's a catastrophic loss event. Or what if new competitors see how profitable this niche is and try to jump in, driving down prices? It's that classic tug of war between a great business model and the real-world risks of the insurance game. So this all begs the question, if they're so good, why isn't everyone talking about them? Well, it's pretty simple, really. They're not a sexy tech stock. They're not a brand you see on TV. They operate in the specialized corner of the financial world that, frankly, most of us never even think about. They're just kind of boring. And that's exactly why they're a hidden gem. And that really brings us to the final thought here. Kinsale's whole story kind of makes you wonder, doesn't it? Are the biggest, most powerful opportunities hiding in the places we just forget to look? Maybe the most brilliant investments aren't the ones making all the noise, but the ones quietly getting the job done.